Welcome back to another video. Well, late happy Thanksgiving. Haven't made a video in a while, but I'm back. I guess better than ever, if you will. Today's video is going to be a I guess I'm going to say it's a weekly recap, and it's going to be a possible trade recap with a look at my current, if not new, strategy that I will be implementing. So what we're going to do is we're going to look at my old strategy, and we're going to go ahead and change it to my new strategy, which is now including the quarterly theory and ICT structure with, I'm pretty sure it's his 2022 mentorship, with his fair value gaps, order blocks, market structure shift, and all that fun stuff. So let's start off the week. Okay. As we know, there was a lot of, there was a holiday, Thanksgiving. Also, we're getting pretty close to November. Okay. So, the month is slowly. Oh my God, I did not say that. My bad. We're getting close to December. I was like, we're already in November. We're getting pretty close to December, which means that, the month is slowly starting to die out. In 3 days, we get December. So then that's when you would look at the monthly to see where we're at in the monthly. And as you can see, and as you could probably realize with just this off, you can tell we are extremely bullish. Okay. If you look at these candles right here, this pattern, when there's a bullish, I would say erection like this or displacement up, you have, generally was bullish here. It was bullish, and bearish for a few months, like boom, boom, boom. And then we get this November month, and it's the craziest month I've ever seen. It just comes back straight up. No questions asked. You know what I mean? It just, from October to November, which is basically now in December, that's about to start up in 3 days, price has ripped through all this liquidity and is targeting higher liquidity and wanting to go higher. This was, and I'm going to say this, and you might not agree, this was manipulation. I think a lot of people that are on the same page can agree that this was manipulation. This is not normal. It just isn't. To see such a nice reaction off of this to go shoot straight up. I am interested in what happens at the top. Right now, what we're going to do is we're going to look at the daily. Sorry, I just got back from school. I'm a little tired. There's a lot of stuff going on here. Actually, that's not even a lot, but there is some pretty stuff that you need to note. This is just like an order block I have marked out here. I'm going to delete this for now. This is the daily, weekly fair value gap that we have. I'm pretty sure there's nothing on the weekly, but you can definitely see there's this displacement here. So this is a visual displacement. Then there's the actual technical displacement here that you can see off this fair value gap, which I've marked. And as you can see, price action after its very bull run has run up to these highs and almost swept and liquidated this fair value gap. Now, this little price action here on Wednesday shows me that price is willing to reach those highs. It's willing to trade up there. And as you can see, it traded up there and it kind of just chopped up, chop. It's still chopping. It's still chopping there. You know what I mean? It's not there quite yet. On the weekly, I'm pretty sure there's a tiny fair value gap here that was marked right here in fair value gap, right? And this was the weekly that's about to close in 3 days, and this will form that fair value gap right here, that bullish fair value gap. And so what am I expecting for the rest of this week? I'm expecting a very strong bull run, or I guess just price to move primarily above this high. So, I can mark this as buy side, right off the bat. So we'll mark that as buy side because I know that's buy side. So buy side. Liquidity. Okay, and that's gonna be in blue, and this is good. So that's buy side liquidity up here. We're also gonna mark, just so we know that this is 1 day, just so we're aware. And if we jump down to the 4 hour or the 1 hour, we could see a little better. Let me delete this. So now I'm going to talk about today's trade and what happened today. Again, I have not traded in a while, but I have been seeing the market, and so far it kind of looks like a flag, you know. And I really don't trade this because it's like the flagpole is here, right? And then you have the flag that's like waving around. And if you know what a flag looks like, you have this big triangle. I don't know what I would want to describe it like something like this, like a big like triangle like this. I'm not drawing trend lines. I'm just showing you what I'm like imagining, right? And the flag is like down here, for example. So this whole move is like the flag right here, and this is where there's a triangle, right? The flag itself is it moves in all kind of direction, right? But guess what happens? What if the wind isn't doing anything? What happens when the wind isn't pushing the flag anywhere? The flag doesn't move. And I hope you notice the flag, right? It goes from big to small. And so the smaller it gets, look at the, you know, I'm not saying this is trend lines, but I'm just saying it consolidates, right? It becomes very, very thin, and it becomes where price doesn't trade to new levels. It only seeks and destroys old resting liquidity, and it does not move from there. Now today was a little different. Don't get me wrong. Today we had a pretty big move. We did have a lot of stuff there for us to kind of take out, and I do want to hope you notice this. The price, right, almost there. So I'm expecting price to run up this high and to actually close above this, which actually matches up with my standard deviation that I have here marked on that possible trade that you could have taken today. So let's look at the 1 hour, because that's my favorite time frame. The 1 hour. What are we noticing? First off, I would like to get this on the 1 hour. Oh, no, not this one. This one. Not sure why it's so big. Okay, so this helps me figure out every single day, and we're going to turn off this for a second. It helps me figure out every single day where the London session liquidity is, where the Asian session liquidity is. And I want you to notice that today, no, today is Tuesday. So Tuesday 12, okay. Don't know why that's that. Should be something like this. Okay. That's very big. Okay. So Tuesday we open here, okay? Asian highs are created here. Asian lows are created here, okay? What gets taken out first? The Asian lows, right? So we create the Asian lows, trade, boom. London highs are created up here, by the way. That's going to be important. Asian highs are created above. London highs, are created above too. We trade down. 2 a.m. This is all London. Trade down. All the way down. All the way down. There is liquidity here, but this isn't liquidity that we're targeting because it's not these lows. It's just resting liquidity. I'm not even sure this is liquidity because it's really not. There's no swing low here. London lows. This is important. So you should mark this. Okay. You have your London lows here. And then you have market, where's 6 a.m. Okay. And this is where the quarterly theory comes in. And you have, let's just do this. So you have the London session here, which for some reason is very, very thin and you can't see shit. You have the London session here that is happening. And then if you switch over to the New York session, you can see that at 6 a.m., we start our London session for our first, what would you call it? What's it called? Quarterly, like block, like, I forgot the name. That right there is either accumulation or distribution or continuation, right? Now, on the 1 hour, it seems It seems like it's a continuation. But I do want you to notice that where is 9? Okay, so we're actually going to move down to the 5 minute because we're going to try to find the New York Open because that's going to be important. So 9 and 9:30 was right here. Okay, so that's the New York Open right there. And I'll tell you how important that is. We create London lows. And then at 7:50, around 8, right around 8, we take out those lows. This is important. This is where you watch price action. Now, I unfortunately did not have a high time frame PD array. I'm not even sure there is one on the daily to take reference off because remember, daily high time frame PD arrays are based off the daily, weekly, and monthly. Okay, nothing else basically. So, what's next? You want to look at price action. You can see that on the 5 minute, and I wouldn't recommend doing this a 5 minute, but I just watched down the 5 minute. You can see there's a reversal. It's only the 5 minute. It's only 8:20. Anything could happen. So don't make your bias right now, obviously. And then we trade up. Okay. Then we chop around. Because it's 8:15, right? Or 9:15, my bad. Remember, we did just sweep liquidity here. And I want you to notice something, please. I want you to notice something. In the 5 minute, we have, is this off? Yes. We have the quarterly theory that is helping us decide where the manipulation is and where the distribution will happen. Not everything is to date, and not everything is to date, but not everything needs to be on like the perfect line. For example, here, I noticed that we had accumulation. This, to me, is considered accumulation because we are not taking any highs. We're not taking any lows. We're kind of just trading. I mean, this is like very basic trading. It's just going back and forth. Yeah, we have a leg down, but it's a lot of just nonsense. There's no big move. There's no big liquidity areas taken out. Nothing really major happens. And then we have this little leg down right here. Okay. And this is important because we have the manipulation move that happens right here in red. Okay. I want you to notice that because the manipulation happens under this liquidity, right? Because people, if they had their long stops, would be under here and we just completely took that out and reversed. Okay. And guess what? We're in the manipulation quadrant, right? Q1 is accumulation, Q2 is manipulation. So you're expecting some kind of manipulation, and we get it. We have manipulation. This is pure manipulation in the quarter 2 quadrant. We also have true open. This is important because if price was above true open, you know the rule. We can't call. We can't buy. We have to short. And guess what? True opens up here before the big down move, right? Quarter 2 opens, first candle. True opens there. Guess where manipulation happens? Way below true open, which means we can start buying, which means we can fake people out and we can start buying that shit up. And then we get around 9:30, okay? And this is where, as any trader knows, and I hope they know by now, by watching not only my video, but any other video out there, is that 9:30 is volatile as fuck. It's volatile, isn't it? And I want you to realize something. And I just told you about the New York True Open. And I want you to notice this, please. Do you notice before the standard deviation gets in your way? Do you notice anything here? Because I can see something very, very clear here. It trades up at 9:30. This candle is important because it shows us it's trading right under New York True Open right here. No, I mean, that's not something like super, super interesting, right? But to me, that catches my eye. And then guess what? 9:30 opens and we go up. But where do we go up? I want you to notice this. Where do we go up? We're not sweeping liquidity. We didn't go up to a fair value gap. This in a way, yes, you could say, hey, this was an order block. Yeah. Well, I mean, yeah, I swept the order block. That's fine. That's your analysis. That's fine. Yes. But we're above the New York True Open. This is the quarterly theory. We're above the New York True Open, which means that we can sell. And guess what? Market's open. We can sell. Anyone can sell. Lots of people can sell. So what do? It's volatile. And we're selling. But French trades, why are we selling? I'll tell you why. Reaccumulation. That's right. To get distribution, you need accumulation. But to get reaccumulation, you need some kind of displacement up. And then you need a break of order flow. So what does that mean? That means that if you're getting bearish order flow, even though you're breaking up to the uptrend, because remember, we're about to get a market structure shift, okay? And I had this planned out in my head. The only thing that I would say right here is that this was the previous market structure shift that was created right here, okay? And that's something, because this leg up to get that market structure shift created a fair value gap. Now, I'm actually surprised. I think it's supposed to be over here, but I can't find like a high. The only high I would find interesting would be this one. And that's like the high I would mark for my market structure shift would be right here, because this was failed and this was broken through, and that high right here was made off this leg. And so actually to highlight that, you could have taken your entry, right? Because what do we know in our strategy with the quarterly theory? We wait for these kind of moves. We wait for the 930 to open, right? And guess what happens? We come down. Now, this is without any kind of analysis. So I'm going to remove all of this just so it's clear in your eyes. What do I like to do? First of all, when I see a move like this, I don't draw the standard deviation yet. I don't do anything. I know there's a market structure shift. So what do I say? Is there displacement? Do I see current displacement happening? Yes, I do. The clearest one I see is this one right here. This one. That's the first one. And there's the second one right here. Tiny little one. You might have missed it, but it's there. Okay? And then there's a third one right here. But this one gets traded into, right? So there's three. Okay? These are the three. I'm going to remove this one because this one in my eyes is not valid because it's already been traded through and it's been traded through choppiness. So in these two fair value gaps that are created on the 5-minute, what about the 15-minute? Because that's important. There's nothing on the 15-minute. Is there anything on the 5-minute? Yeah, there's two of them. What else do I like to do? I like to draw the OTE for optimal trade entry because you want to be precise on these entries. My entry is to go long, remember, because now we're under the true open, which is right here. So I would draw my fib. I would take the current swing low and the nearest swing high. So the swing high that we got usually would be from the market structure shift, which would be up here. So let's just do this. Draw your OT here. What happens? Look at our OT. Swing high and then swing low that created the market structure shift. Or my bad. Swing low that created the swing high that took out the market structure shift. With liquidity being taken right here. Okay? So the OT shows, and I'm pretty sure I had this drawn out wrong before. I had this at this swing high. I mean this works too. You could have two OTs like line up perfectly right here. Does that make sense? I mean, if that's not making sense, let me know. But like that's pretty obvious, man. That's dead on like perfect. Okay, so let me recap because some of you might have missed it. And some people do this. Some people draw the fib, which is fine. But let me show you. If you draw a fib, guess what happens? You don't get the full range. You don't even get anything. You just get the halfway range. That's not going to help you. The optimal trade entry is there. And actually, I have a V2. Let's see where that is. Okay, that's basically the same area. This one's a bit more accurate. I like this one. 8 trades down to that range. And notice where price is closing on the 5-minute. It's closing above this 0.705 golden zone line. I hate to call it golden zone. It feels so cringe, but Yeah. And guess where it trades? And it closes inside. It closes inside this fair value gap. Did it target this fair value gap? No. Could we have known that? No. But you could have taken an entry here because off this fair value gap, right? You could have taken an entry here. And with my strategy, you always wait until it's 10. Where did 10 hit? Right here. Okay, so you wait for 10. You could, and listen, the thing is, I want you to understand this about, and this is a message to you, to myself, if you're watching these videos in the future. The strategy that I'm implementing, right, is still a work in progress. The 10 rule is to discipline myself to not trade before 10. It doesn't have to be on the dot. If I see a perfect A+ setup happen in front of my eyes at 9:59, I can take that trade. It doesn't have to be 10 on the dot, right? If I see that liquidity has been swept before 10 and it's going my way and there's a market structure shift and I understand where price is going, then I can take the trade. I don't have to wait for 10 to hit, right? Because then I could miss my trades and, you know, could lose. Now, the trade you could have taken, right, is off the OT, right? So you take the call here, straight off the OT. And then what's your risk? Your risk would be these lows. Okay, and it's like, I would even put them like closer, but that's just to be safe, is these lows. Let's not worry about the take profit. I just want to explain why the low is here. You might be saying, oh, why not just like this low or this low? These lows not only protect you from a sweep of this OTE, because if you got this wrong, because what price likes to do is also trade the whole OTE. For example, it likes to come down and trade under this to sweep the whole OT level, right? And to get into this fair value gap. So if price comes down into this fair value gap, you'll be in drawdown. And if it comes down even further, right, then you know that your position was not good and you should not be in your position, right? But in this case, all odds kind of added up, right? And in my mind, this was, and if you really look at it, sweep of liquidity, sorry for the line, sweep of liquidity, manipulation, accumulation, New York Open, comes down, accumulates, reaccumulates, boom off. Because why? Because there is, engineer liquidity up here, engineer liquidity up here, and up here. So all spots for it to come. Well, that sounded wrong. Then what do? When you have a move like this, there's multiple take profits you could have. With a good entry, bad entry, whatever, you can even enter reaccumulation. I see it right here. Fair value gap created here, reaccumulation, taps in, comes back up. This is institutional order flow. You might not see it, but I see it. So what do? After you have your entry, okay, what you want to do is you want to draw your standard deviation. So what I like to do is I like to do from my entry to the nearest swing high or the near swing low or vice versa that happened after or before the market structure shift. In this case, it would be this move right here. If you can see it, it would be the near swing low, right? So the one we took our entry off, and the near swing high, which is this right here. I draw my standard deviation and it gives me this. That's the whole move, right? The fake out, right? And that gives me the standard deviation for price to go. What I would like to do is I would like to represent price and take profits at each of these key levels. The 0, the -1, the 1.5, the 2, and the 2.5. And if you're in a swing, you'd go 4 because this is going to go to 4. Now, what you want to do then is you want to look over and you want to see if there's any kind of liquidity resting there, which I can already see some. And then you take your profits from there, basically. Now, the profit area and profit target is the 2.5, or the 2 and 2.5 range area. Now, if you tell me that this is not institutionally like made, I don't know what to tell you. This is so pinpoint perfect. I don't know how you not see it. You know what I mean? 0. This is like super low risk to reward, right? If you just come up here, you get to the 0. That's fine. That's your trade. That's good. right? That's the first profit target for 0. If you want to aim at a higher, where would you go for a standard deviation? The one right here. I don't know if you can see it right here. Guess where that lines up? Exactly, perfectly with this engineer liquidity, which is probably, if I'm turning on my kill zone, oh, would you look at that? It's right above the London highs and the Asian highs. What did I say in the beginning of the video? I said that's going to be important as fuck. That's going to be important because that's also take profits. The Asian highs, the London highs, price could come up here and just sweep that. That could be your first take profit. And then if you go into break even, at least you made money. Boom, bang. First take profit. Okay? That's not that. I'm not done. 1.5, what do we get? Oh, would you look at that? Liquidity. And this is very, very good liquidity right here. Actually, it's all right. It's liquidity there, you know, big move down, creates liquidity up here. There's even liquidity up here to take. And this is where you get into the, should I get out? Maybe so. This looks like a big trade. Because 1, you're already at basically, what's the RR on this? I don't even know how to do this. 5. Okay. 1.5, you're at 6. And if you're targeting 2, you're now at 7. Almost 8. That's a big trade. That's a big trade for no risk like that. No drawdown. That's a very big trade. In this zone, you're expecting some kind of liquidity, some kind of PD array to interact with. 2 in the zone, you're also expecting liquidity, right? We have liquidity here, liquidity there. That lines up, equal highs type shit right here. But we also had liquidity right above the 1.5. So this is the zone I would be careful if it trades above, right? Like you can see, traded 1.5, came down, traded above, reaccumulation. All right, wait, my bad. This is reaccumulation, then redistribution, or some shit like that. It's both ways. 2 and 2.5 area. Guess what happens? We find liquidity. 2.5 is there, right? But in the zone, there's more liquidity to be targeted right around here with these equal highs. And guess where we turned up? We actually went higher. But you'd be out by then, right? You would not trade it all the way up here. I promise you that. You would not. So take a minute to look at this. Again, this was I just got on. So it's not that I'm making this up. It's not that I'm creating these charts. This is standard deviation, and it's useful if you know how to use it with a valid market structure shift, with a valid sweep of liquidity, with a valid fair value gap. Little disclaimer, and I'll tell you this. This is actually very big disclaimer. This does not happen every day. This did not happen yesterday. It didn't happen the day before that. Maybe here and there, but just look at this fucking bullshit. It's probably news. And talking about news, actually, I didn't even check news. Did we have news today? Did we have news? Very good. My shit is frozen. Oh, no, it's good. Wednesday. 8:30. Premium JDP QQQ. We're Tuesday. I'm tripping. Oh! Yeah, we did have news. That's probably why. 10 a.m. We are consumer confidence. What does it say? If actual is greater than forecast, that means it's good for currency. It was greater than forecast, which means that DXY went up. That means that we should have gone down at 10 a.m. Why did it go up? Okay, that's a little odd. What's going on? Where's 10? Yeah, we went up. Oh. Okay, now I get it. Okay, yeah. Yeah, we went up in a downtrend. Yeah, okay. No, okay. I get you. Okay. That makes more sense. Yeah, that makes sense. So with those take profits in mind, right, you obviously watch the price go. Again, if price doesn't go your way right away, is that a problem? No, that's not a problem. And if you look, if you're still in this position, did it go into drawdown? No, right? But here, this whole move down, you could, I'm sure people traded this. But do you pay attention to this right now? No, you don't. Because what does it really want? Right now, it doesn't want anything. Like, yeah, it might have bounced off some kind of wicked fair value gap, but could you, on your 5-minute analysis, could you really tell that there was something here for price to come back to? No, not at all. Because all this accumulation was reaccumulation, distribution, redistribution, reaccumulation, all the way up. And now all it's going to do is come back up and go to the -4. Because it's going to want to come to this buy side liquidity on the daily, right? Could you hold a swing position? Might be risky because this might put you in drawdown, right? Because you were up so many profits, and now if you didn't take profit because you're in a swing position and you can't just take profit like that, it might be a little hard, right? Let's see. I just have not watched this at all. NQ, I don't even have anything for you. I'm not gonna lie. Did we get the same price action on NQ? Let's see. Looks like we have some of the same charts. Let's see if we have the same strategy and same thing happening. Q1, it looks like we have accumulation here. Q2, we have manipulation happening right here with the low. Okay, that's good. This happens New York session. Good. We go up. True open is right here at 9. Okay, so this is not 9:30, but that's good to know. We start selling. Come back up at 9:30. Okay, bullish action. We go up. So we go up this New York true open, I'm guessing. Yes, we do. Okay. And we sweep some kind of liquidity up here. Order block, it looks like. Come back down, make the New York high. Come back down, and then if you were to draw your OT, if it would draw correctly, there we go. I don't know why it's doing this. Okay, actually, this is a good example. Look at this. You remember when I said the price would want to trade below this 0.5 and come down to the 0 point and trade all the way down? This is what the fuck just happened? I just fucking lagged. This is a good example because on NQ or on SPX, you saw the price action on the 5-minute. We're on the same time frame here on NQ. The 5-minute was wicky. It closed above. Here's what happens. We go all the way down, trade all the way down here. And guess what happened? We're in this fair value gap. Look at this. Almost tapped into it. Basically tapped into it. Didn't tap into it, but almost did. Okay, so we wanted to go a little lower. And then guess what happens on NQ? Reverse. Who would have known this? I mean, come on, right? Now, I wouldn't take a trade on this if I saw NQ. Okay, what I would have done maybe is waited for maybe a redistribution because we didn't get news yet. So we should know that, first of all. So we wait for news hits. And then that's where you can do the redistribution. Okay, then you can look for a fair value gap. So where's the fair value gap created here? Okay, it's right here. Fine, right here. Does price trade through it? Yeah. Yeah, it does. But guess what? Guess what you could have done? You could have entered off the consequent encroachment off these kind of institutional order flows. As you can see, price actually comes back twice to test that. I would wait off news like that. Like if there was no news at 10 a.m., I would have taken like multiple contracts. I wouldn't even trade when there was news like that. Like that's a big impact. There's a lot of liquidity here. There's a lot of buyers, lots of sellers. Hence why this price action is acting choppy. It's again straight off the New York True Open. So it's being sold and bought, sold and bought, sold and bought back and forth because it's over, under, over, under, over and under. Hence why I came back down again and really took off. But SPX looks a little cleaner. Don't know how you would have taken it on NQ, but people somehow figure it out. So I'm pretty sure you can also figure it out. I prefer to trade SPX because that's just what I was born with, you know, what I like. But yeah, that's going to be it really. We didn't go over my strategy. Actually, we could probably go over just quickly, just to revise what it is. Okay, so the current strategy that I'm doing, if it's not something else, don't think so. was have a daily bias, watch the news, and analyze other stock price action. Wake up early for the day. Okay, so this is just bias. Okay, that's good. Mark out Asian London session highs. Okay, yes, that's already done. That's part of the strategy. Yes, this is done. Pretty sure there's, yeah, my indicator already does that. Saves me a lot of time. And then wait for price to come back to a fair value gap or PDA rate, preferably order block inside the fair value gap with an OTE. Remember to never trade on red folder days, key to daily value. Okay, so this is saying that follow trend entries on internal range targeting external range. Yes, usually target lowers. Okay, higher time frame. Okay, so I need to change this. This should be the quarterly theory. Quarterly theory plus ICT concepts strategy. All right, so I'll update this and I'll keep you guys updated. I'll see you guys very soon.